Hello, fellow traders. 'Tis I, the Rumpled One. It is Thursday, September the 27th, the year 2018. Let's talk trading. How many? How many what? How many anything? A lot of times people go, well, how many methods do you use? Or how many indicators? Or how many lots do you trade? The answer is it doesn't really matter because it's what you do that matters. Now, why would somebody want to know, for example, how many indicators? They think that maybe there's some optimal number of indicators that if placed on the chart, it's going to increase your chance for success. Now, there could be some truth to that. Many traders talk about confluence, where, for example, if the pivot point happens to line up close to a Fibonacci line, which may happen to line up with, say, I don't know, some other line, and then you have, well, if you got this on the H4 chart period and it's lining up with the weekly and it's lining up with the daily and it's lining up with the monthly and on and on and on. So as you can see, you can get carried away. Some people say, well, you should have at least one moving average and at least one oscillator and at least one, and it's just, I just kind of have to laugh because, you really don't need any of that stuff. I mean, I think we all go through phases, in trading and in life where at some point you think you have to have certain things. And then at some point you think you have to do certain things in order to be something. So it's like that have, do, be. Now, if any of you have gone through LifeSpring, you'll recognize that. But the thing is, you can just be. So you can just be a trader without, having all these things and doing all those things. So now it's to the point where I can pretty much just look at a chart, no indicators and not even any lines, and I can see what I need to see. I might have to flip across a couple of time frames. It's like, okay, is the weekly, is it up for the week? Is it up for the month? Is it up for the day? Or I can just use my candle color multimeter, and that tells me, usually it tells me just about everything I need to know, and I can look at a chart and see what's going on. And the only thing it doesn't tell me is what my money and risk management is. So once again, it's the dollars or percent of your portfolio you are willing to lose per trade, and you adjust your position size or stop loss accordingly to what you see on the chart using one of these formulas. Okay, we are now 95, 96 pips off that high, 97 pips on the monthly high on the euro yen. So you see we've had a nice run off the bottom there. And on the weekly, you can see we dropped out of the upper wick zone. We didn't bust through it, so we came out of it. Right now we're 10 pips below. And for those of you tracking the gaps, you can see there's only one that's failed to fill. So today's Thursday. So I remember yesterday there was two. I think there was 2 or 3, and ditto for Tuesday. So even if you came late to the party, you still had a chance, still had the opportunity to make money using those gap fills. So don't think that if you don't trade it on the first day of the week, that Sunday, Monday, that you can't take advantage of it. Because once again, this usually fills up, pun intended. It fills up with fills, right? and we look at the daily, as you can see here, we came up inside the previous daily candle body, and then we dropped into the wick zone, and we dropped out of the wick zone. Nice move there. Nice opportunity to bank a bunch of pips. About 66 pips if you nailed it. And we can see we've got 3, 6, 7 above 100 on the daily range, with the euro yen clocking in at 110, dollar yen 55, so that's double, once again showing the reason for the switch. Even though I still do trade the dollar yen, because it's if I see an opportunity, I just take it. Why not, right? And you can see euro yen triggered a buy, hit the pivot. So the pivot point traders were rewarded, and that was good for about what? 21 pips. That's a nice trade right there. Then you can see here, buy zone, short trade, heading right through that weekly open. Nice profit to be had. And you should have taken profit here when that candle turned against you. It failed to make a lower low, went green, out. And if you decided to stay in, once again, on that, when it scraped above that wick there, should have taken profit. Because people always asking, where to take profit. Nice rat zone trade here, green rats. So, once again, okay, we want to look at how many. Well, we've got monthly, wick zone looking at here, weekly. We got daily, so that's 3. We got the buy zone 4, rat zone 5. You see, we take the pivots, that's 6. So there's 6 methods there. Price action, once again, it could be used as a separate method. So there's 7. These lines are the same as before, so that doesn't count as a new method. Wick zone lines are same as before, so that's not really a new method. It's just a different presentation. Holo, that's new, so that makes 8. You see the highest open, lowest open right here. Inventory reduction bars, that would make 9. And you can see we just had a long trigger there. It's already happened here and here. And our short trigger line is here. And here's a couple other short triggers up above. These lines have been on the other charts, so this isn't a new method, just another way to look at it. And the thing is, what do these methods have in common? They're all horizontal lines. We're not basing it on squiggly crosses. Now, what we are basing on a quote-unquote squiggly cross are the entry, pinpointing the entry. So once again, when the bid makes a peak right here, and then we get the ask coming down through that peak, we start to sell. And then when the bid crosses above the lowest, or the valley of the ask, we start to buy. That's how we time our entries. And you can see here, once again, we put that trade on, or we open up the chart about here. See, there was a long trigger, actually a short trigger, a long trigger, then a really nice short. So just something as simple as the Einstein line, which you could call what, method 10. So just when you open the chart, draw a horizontal line wherever that price is, and then you just trade accordingly. And we've got a 2.5 pip range here, or 2.5 pips above, 2.5 pips below. So you basically got 5 pips. When it exits out of 5 pips, you go that direction, and it's that simple. I mean, sometimes you'd maybe get a pip or two, you scratch, and then finally you get something that looks like this. And once again, you're just trading with the candle color here. And you can, I guess I have to scrunch it so we can see it. But just trading with the candle color shows you that it pays off. So what was that, 10 different methods? But they're pretty much all the same method. You have a horizontal line and you go with price as it crosses the horizontal line. So is it 10 methods or is it one method? It's where you place the lines. You could call it a different method, but it's the same. So it's just something to keep in mind. Do I advocate you using 10 different screens? No, these are for educational purposes. Pick whichever one works best for you. Because as you can see here, maybe you weren't available at this time of day. Maybe you just started around here. So it really wouldn't have worked for you. So you have to pick something that works for you. Maybe the buy zone, you could have tried the buy zone, but maybe price wasn't anywhere near the buy zone. So that doesn't work. And it's not in the rat zone. And the pivot's already been taken out, right? So, but there's always price action, right? And you can see maybe there's a possibility for a line cross, right? Maybe there's a holo. So that is why I have these dashboards so they can tell me, what's available, what trade may or may not be available. Is it a wick zone? I don't even really talk much about inside bars, but that could be a possibility. Let's see. Where was the other one? Okay, wick zone, holo. So you can see here, there's a highest open trade right there on dollar yen. There's some few others that are setting up. We're right there to go short on the dollar yen. And it looks like it just broke through that highest open. So, fellow traders, how many doesn't really matter because it's not what you trade, it's how you trade it. It's Thursday. Let the draining of the banks continue.